Forget what the so called technical traders are telling you. They're all glued to the wrong charts, lost in a sea of lines and squiggles, obsessing over moving averages and oscillators. But what if there's a signal that has characterized every single Bitcoin boom with incredible clarity? It's not a secret indicator that costs $1,000 a month, and it has nothing to do with fancy triangles or head and shoulders patterns. What if I told you that the daily, weekly, and even monthly price charts are mostly just a distraction, a chaotic show of noise and volatility designed to shake you out of your positions and enrich the traders who thrive on that chaos? For years, we've been told to find patterns in the price, to draw lines, to guess at support and resistance. That's like trying to predict a hurricane by watching the leaves rustle in your backyard. You're looking at the effect, not the cause. The real signal isn't found in the price charts. It's found in the very foundation of the network itself. It's in the halls of Congress and the boardrooms of the world's biggest financial players. Today, we're going to pull back the curtain on the powerful forces that actually kick off Bitcoin's legendary bull runs. This is the framework that has defined every major price explosion, and we'll break it down piece by piece so you can see why the next one may already be forming. So, what is this signal? It's not a single line on a chart. You can't just pull it up on TradingView. The signal is what I call the adoption wave. It's a perfect storm created by two fundamental forces that, when they rise together, create an unstoppable wave that carries Bitcoin to a whole new level. The two forces are network growth. This is the pulse of the Bitcoin network, a direct measure of real organic adoption. We're not talking about price. We're talking about the number of people actually using Bitcoin. The best way to track this is by looking at the growth of new and active wallet addresses. Think of it like a social network. The stock price might bounce around, but if the number of daily active users is climbing, the network is becoming more valuable. For Bitcoin, new and active addresses are our daily active users. When you see a sustained, accelerating rise in unique addresses sending or receiving Bitcoin, you're watching the foundation of a bull market being built. It's a direct measurement of global demand, showing that more people are getting on board. This is the grassroots fuel for every bull run. Regulatory maturation. This is where the big money comes in. It's the process of Bitcoin evolving from a fringe asset to a legitimate part of the global financial system. For its first decade, the establishment saw Bitcoin as a curiosity for tech geeks and rebels. But with every cycle, that view has crumbled. Regulatory maturation is what happens when governments create clearer rules and institutions build the bridges for mainstream investors. This includes everything from the approval of spot Bitcoin ETFs, which give everyday investors easy access, to pro-crypto legislation that clarifies the rules of the road. Each step removes a barrier to entry for enormous pools of capital. When a major institution gets the green light, they don't just dip their toes in, they bring billions. When you see explosive network growth happening at the same time as accelerating regulatory maturation, that's the magic moment. That's the adoption wave. Grassroots demand from the ground up meets institutional validation from the top down. This is the combination that turns a simple price rally into a full-blown, paradigm-shifting bull market. Suddenly, the noise of the daily charts doesn't matter as much because the true driver becomes crystal clear. Now, let's jump in a time machine and see how this exact pattern has played out before. Talk is cheap. I get it. But the adoption wave isn't just a theory, it's a pattern we've seen play out in history. We're going to look back at Bitcoin's most explosive bull markets, not with chart squiggles, but by looking for our two forces: surging network growth and landmark moments of regulatory maturation. The 2017 bull run, the retail mania. Everyone remembers 2017. It was the year Bitcoin exploded from an internet hobby into a household name. The price launched from under $1,000 in January to nearly $20,000 by December, an incredible 1,900% increase. Technical traders just drew lines straight up, but the real story was happening under the surface. First, network growth. The on-chain data from that time is stunning. The number of active Bitcoin addresses climbed steeply all year. The network started 2017 with around 500,000 to 600,000 active addresses a day. By the peak in December, that number had surged to over 1.1 million. This wasn't just old hands trading more, it was a tidal wave of new people entering the ecosystem, confirmed by a massive spike in new wallet creation. The media frenzy created a feedback loop. Price goes up, news covers it, new users jump in, pushing the price even higher. It was pure retail-driven FOMO, but it didn't happen in a vacuum. It was propped up by the second force,
Regulatory maturation. While many governments were still scratching their heads, a few key dominoes fell. In April 2017, Japan officially recognized Bitcoin as a legal payment method. This was huge. It created a clear legal framework in a major world economy, and a wave of demand from Japanese investors followed.
Then, toward the end of the year, Wall Street made its first real move. In December 2017, the Chicago Mercantile Exchange, CME, and CBOE Options Exchange, CBOE, launched Bitcoin futures contracts. For the first time, big shot institutional investors had a regulated, mainstream way to get exposure to Bitcoin. Hedge funds could now trade Bitcoin without the headache of custody on unregulated exchanges. The signal was clear. Bitcoin was arriving on the world stage. The 2017 boom was a perfect storm of retail-driven network growth, meeting the first glimmers of institutional and regulatory legitimacy. The 2020 to 2021 bull run, the institutional stampede. After the 2017 peak, Bitcoin entered a painful bear market. Many declared it dead again. But by late 2020, the adoption wave was quietly building, and this time it felt different. The price surged from around $8,000 in early 2020 to an unbelievable $69,000 by November 2021. Let's check our forces. First, network growth. On chain data once again tells the story. After lying dormant, the number of active addresses began climbing steadily through 2020, eventually breaking the old 2017 peak. By early 2021, the network regularly saw over 1.2 million active addresses daily. This growth was less about frantic FOMO and more about a growing belief in Bitcoin's long-term purpose. That belief was turbocharged by our second force, regulatory and institutional maturation, which went into overdrive. The catalyst was a 1-2 punch: the global economy, and the roaring entrance of corporate America. The economic story was simple. In response to the pandemic, central banks fired up the money printers, unleashing trillions of dollars. This sparked serious fears of inflation, and suddenly, Bitcoin's story as digital gold, a scarce, finite asset, started to make a lot of sense to a whole new class of investors. Then came the validation. In August 2020, the tech firm MicroStrategy announced it had bought $250 million in Bitcoin for its corporate treasury, calling it a better asset than cash. This was groundbreaking. Soon, others followed. Square invested, and most famously, Tesla announced a massive $1.5 billion Bitcoin purchase in early 2021. At the same time, the regulatory world was warming up. Giants like PayPal and MasterCard started offering crypto services to millions of users. In September 2021, El Salvador made history by adopting Bitcoin as legal tender, a sovereign nation embracing the network. And all the while, the market was buzzing with anticipation for a spot Bitcoin ETF in the US, which finally launched in other countries, paving the way for even more capital. The 2021 boom was the adoption wave on steroids, sustained network growth, supercharged by an inflation hedge narrative, and the unprecedented arrival of institutional money. In both bull runs, the pattern is the same. It doesn't start with a chart. It starts with more people using the network, and it ignites when the old guard of finance and government starts to legitimize the asset. That's the blueprint, and the signal is flashing again today. That brings us to today, late 2025. The market has been through another rough patch, washing out the tourists and speculators. And once again, under the surface, the two forces of the adoption wave are lining up with a strength we've never seen before. If history is any guide, what's coming could dwarf everything that came before it. Let's break down the evidence. Force 1, network growth, a silent global surge. While the Bitcoin price has been choppy, the underlying network growth has been expanding relentlessly. This isn't the frantic mania of 2017, but something bigger, a broad, steady, and global adoption curve. Reports from 2025 show global crypto ownership has continued its steady march upward. In places like the US, UK, and France, the percentage of the population owning crypto has grown significantly since 2024. One survey even showed 14% of non-owners were planning to buy for the first time this year. But the real story is global. The 2025 Global Crypto Adoption Index reveals that while North America is climbing, the true grassroots momentum is exploding in Asia and Africa. Countries like India, Nigeria, and Vietnam are leading the world in day-to-day crypto use. The Asia-Pacific region reportedly saw a massive 69% year-over-year jump in crypto activity, processing trillions in volume. This isn't just ETF buyers in New York, it's millions of people in emerging markets using digital assets for savings, sending money, and doing business. The network is stronger and more globally distributed than ever. That's a rock solid foundation. Force 2, regulatory maturation. The game has changed. If network growth is a steady flame, the regulatory landscape is the gasoline being poured on it. The events of 2024 and 2025 have fundamentally changed the game for Bitcoin in the eyes of the world's largest players. The most obvious catalyst was the approval of spot Bitcoin ETFs in the United States in January 2024. This wasn't just another product, it was a regulated superhighway connecting trillions of dollars in traditional finance directly to Bitcoin. The results have been staggering. By late 2025, BlackRock's IBIT ETF alone has reportedly seen net inflows of over $28 billion. In total, US Bitcoin ETFs have pulled in over $30 billion, sucking a huge amount of Bitcoin off the open market. But the ETFs were just the opening act. The political tide in the US has turned dramatically. The Trump administration, taking office in 2025, has vowed to make the US the crypto capital of the world. More importantly, this rhetoric has been followed by action. The hostile stance of the previous SEC is gone, replaced by a focus on creating clear rules. In mid-2025, Congress passed the first ever federal framework for stablecoins, the Genius Act, requiring one-to-one backing and bringing legitimacy to a key part of the crypto ecosystem. Broader bills like the Financial Innovation and Technology for the 21st Century Act, FIT 21, which clarifies which assets are commodities and which are securities, have also passed with bipartisan support, ending years of regulatory uncertainty that held back major institutions. Finally, we have the economy. After a period of aggressive rate hikes, the Federal Reserve began cutting interest rates in late 2024 and has continued into 2025, lowering the federal funds rate to a range of 3.75 to 4.0% by October 2025. Historically, Bitcoin thrives when interest rates fall and more money is flowing into the system. Those economic tailwinds that powered the 2021 bull run are returning. The prediction: the coming supercycle. So what happens when you combine the strongest global user growth in Bitcoin's history with the most significant institutional and political validation it has ever received? You get the setup for a bull market unlike any we've seen before. Previous booms were driven by one main force: retail FOMO in 2017 and institutional curiosity in 2021. The next one looks to be driven by both at the same time, with the added unprecedented power of clear US regulation. The demand shock from ETFs is already a constant drain on the available supply. The new regulatory clarity is unlocking the next wave of conservative capital from pension funds and corporations that were waiting for the green light. All of this is happening on a foundation of unstoppable global user growth, especially in countries where people desperately need an alternative to their local currency. And let's not forget, the 2024 Bitcoin halving already cut the new supply of Bitcoin in half, creating a classic supply squeeze. The signal is clear. The adoption wave is building. While short-term price swings are always guaranteed, the fundamental case for Bitcoin has never been stronger. Analysts are already forecasting prices of $120,000 to $140,000 by the end of 2025, with some predicting a move toward $200,000. This isn't just another cycle, this is what it looks like when a new global asset class finally comes of age. For over a decade, everyone has been arguing about what Bitcoin is: a bubble, a scam, digital gold, the future of money. But while the pundits were arguing, a quiet revolution was happening, built not on hype, but on two powerful, undeniable forces: network growth and regulatory maturation. We've seen the evidence, we've walked through history. Every major Bitcoin boom was preceded by this exact combination of growing real-world use and increasing establishment acceptance. In 2017, it was retail users and the first regulated futures. In 2021, it was corporations hedging against inflation. And today, in late 2025, it's a truly global user base combined with spot ETFs and the full-throated backing of the US regulatory system. The secret's out. The signal is flashing for anyone willing to look past the noise. To see the next boom coming, you don't need a crystal ball. You need to watch the fundamentals, watch the network grow, and watch the walls of the old financial system come down brick by brick to let this new asset in. The adoption wave is here. If this gave you a new way to look at the market and you want to keep tracking the real signals with me, make sure you subscribe and hit that notification bell. The next few years are going to redefine finance, and you won't want to miss it.